Hey, what's going on, folks? It's Pete Carmasino here at Chaikin Analytics. Welcome to this week's halftime show here on StockCharts TV. We do this each and every week, right around 1:15, exactly at 1:15 here on Mondays. And we're just trying to show you the power of the fundamental rating that we have, our Chaikin Power Gauge rating, that's available on the ACP platform as a plugin. And week to week, we look at different setups, different segments, different industries. But today, I'm going to switch the gears a little bit. I'm going to look at the market overview. We're going to look at some screening capabilities that we have here on Chaikin, and we're going to look at how you can utilize that and maybe kind of migrate back to the system on the ACP platform and see how the plugins work. But we're going to focus on just the major indices today, looking at the SPY, SPY, the S&P 500 index, ETF, the Qs for the NASDAQ 100, the IWM for the Russell 2000, and the diamonds, the DIA for the Dow Jones Industrial Average. We're going to look at those from an index level, and then we're going to drill down into just some setups that I'm seeing on both ETFs and on individual stocks. So let's get to the charts and take a look. All right, everybody, just a quick market overview. Look, I've been focused on natural gas. Natural gas this morning hit a high, and it's still trading, obviously. I'm looking at a different system while I'm recording this video here today. The high is 9.315, 91.315 on the natural gas contract. Now that's an all-time high for this year anyway, but I believe it's approaching multi-year highs. We're talking about 14 or 15 years ago since this has hit anything higher, and that was around that 2005. Maybe, so it might be longer than that, right? We're talking almost 16, 17 years. 2005, 2006, it's trading around that $14 level. I think 15 is on the table. Just looking at the dynamics of the industry, how things are playing out. We're being attacked as consumers from every angle. Our wallets are being decimated. We know gasoline prices have been going on. They've been going on well before the Ukraine and Russian conflict. We're starting to feel the pinch not only at the pump, but at the grocery store. And I think the next area is going to be at our electric and natural gas bills that we're going to start seeing an uptick in the fall and winter months. I think that's going to be a concern. I think it's going to be a headwind, and we've got to do something about it. Other than increasing supply overnight, I'm not sure what else to do. I don't have all the answers, but I do, I play a mean game of connect the dots, and that's what I'm trying to do here. So we're seeing natural gas rally. We saw crude kind of settle in a little bit. It's really pretty much unchanged. I'm seeing it's trade at 118.44 right now. And I think it hit a high overnight of 120.99. I just said 121 here just to round it up. And what are we seeing here? And just in general in the markets, we're seeing equities are higher. We saw Amazon announce it's split and it's finally trading at triple digits. We haven't seen that in quite some time. It's a little odd to see Amazon trading at 125, 126 per share. But look, it's split. I'm just telling you, it doesn't add value. It just increases the psychological accessibility to the stock. That's it. Okay, that's the trade. And other than that, Amazon's been in a downtrend. We'll look. I'll look at the chart too when we move over to the live system. So just seeing equities higher across the board. We did see they're off their best levels of the day. It kind of rolled over a little bit. But we're seeing defensive sectors kind of sell off. Growth and momentum was picking up. So let's take a look at what we're seeing on a weekly basis. I'm counting two rallies into this bear market, calling it a bear market rally on a weekly basis. Again, using the ACP platform here. I'm seeing rally one that kind of we saw kind of sort of mitigate down to the downside in April. I mean, it kind of pushed higher and then at the end of March and then rolled over. And now we're seeing another push here, trying to get above that 55-week EMA here that I have on the chart. But I also look at the bullish percent. I'm following the bullish percent indexes and indicators, I should say, on the indexes down below in these three panels. So I've got the New York Composite here. I've got the NASDAQ 100 or the NASDAQ Composite Index here. And the S&P down the bottom. All of them are pushing up against levels. Now, the bigger one, the New York Composite, is not close to the downtrend. The other two are, and it's done it before. And you saw in the first rally, they all got to close on the New York, but the S&P and the NASDAQ actually broke those levels. And we're starting to see a downtrend sort of just kind of, it'll peak up above the trend and then roll over. So I don't know if that's where we're at, but that's what I'm seeing. And I'm counting this as rally number 2 in a bear market. Just looking at sentiment, this was last week. This comes out weekly. You can follow this on Twitter. A very interesting setup here. Just look how skewed everything was in May. I mean, we were down to almost 19% bulls, 53% bears that were answering this survey, and these were really just skewed to the negative side. It's a good contrary indicator, no doubt. But I'm just telling you that it kind of leveled out and got back to historical averages. They're down here just in the last week. West Texas crude. This has been our chart that we've been sharing with our members now for months. These were our target levels. This is 85, that's 90, and that's 100, obviously. And we've just seen this migrate higher with the RSI really not getting affected or downgraded at all. And that momentum is strong. So 130 is the top of here, about 132. That's on the table. And obviously up into the 150s is what a lot of people are calling for. And I can't disagree looking at the chart. Natural gas. Here's what we've been showing our subscribers. So I just put the CPI index down here. I put the WTI crude just to kind of give myself reference and see what's happening here. But this is our price, right? I mean, and this is June 3rd. This is the continuous contract. It's not traded intraday, but currently trading, again, I'm looking at the contract that's live, trading at 9.28 right now. So above these current levels here and below 10. So I think double digits are on the table. And 15 is that high back, and I said at the end of 2005. And even we got it, sort of in there in the middle of 2008, closer to, the $13, $14 range. But all of that is absolutely possible. I think the momentum is going to just push higher prices. Now, I just want to look at compared to Europe and Asia. Look at where they're trading. I mean, these prices were as high as $60 in December in Europe. That's the equivalent of like $600 barrel oil. It's incredible, right? This morning, our high is 931. And again, that's traded per million BTUs. And this is the title transfer facility. You'll see it quoted as TTF if you look for it in Asia, liquefied natural gas, all trading just around that $28 to $30 level. This chart only to February 22, so this has changed. But I got this from the EIA. This is our own sourced information that's being published out there. I feel like no one's paying attention to this, but with gas prices flying here in these ranges, I will tell you this: that last year, Europe's average price was 9. Now it's trading in the 30s, and it hit as high as 60. Just keep that in mind. Again, I just talked about this. I just wanted to show this. This was from more recent chart. Now that's really updated to 9, and there's still trading. It came off of 45, but it came into the $30 level as well. TLT, looking at the major indices again, but I had to add fixed income in here. We've been calling this out 4 months. When this broke 135, this is a downtrend in bonds, and that's not really what you want to see, right? Obviously, if you're sort of a conservative individual and you're looking at some sort of risk-off metrics, bonds are not working anymore, not in a rising rate market, right? As rates rise, they're being pushed higher because bond prices are falling. It's not the opposite. Bond prices are dictating the rates, and this is trading even lower today. It's in the 114s earlier today. And I was just looking at a point and figure chart that I love to use. Again, this is on the sharp charts, but I went to the point and figure capability here on StockCharts. Really cool. Love it. I have a $100 level I think that this could approach. And, that's based off of some volumes, but just based off of that last consolidation area where it was kind of just deciding whether to make a high. And these are 7 years old, 8 years old in some of the cases, looking at some of these levels. So we haven't seen this in quite some time. S&P, we're talking about this. We kind of built a head and shoulders pattern. I reversed it because I wanted to see how far it went up and then how far it could go down. It hit the 3,800 level. That was one of the targets. 3,750 was the exact target. But heck, 50 points, we'll take it. Give or take 50 points on a target. Now, some had said I could use this as a neckline, so I did. I redrew it, and I'm showing a 34.20. That's about a 29% drawdown from the top. That's not unheard of in a bear market. It's going to hurt. There's no doubt about it. But, it could see that. Now, 37.50 has got to be kind of achieved first, obviously, and then it could roll and kind of meander down. When? I don't know. I wish I did. But that's kind of what I'm seeing on the S&P. Looking at the SPY itself, 410 has been a make or break level for us for a long time. We're overbought. We're having trouble in that area today. We're trading right around 41.38. So that would be about 413 or so. So it's in that range, and it's between the 410 and the lower end of the range box. Q's same situation, overbought. We've got negative relative strength, and obviously trading around these levels of resistance. IWM, this was an interesting one. At 188 was support for a few times. Once it broke, we had a 175 target. We hit that. Now, again, that becomes support, and 188 becomes resistance, and we're trading right now right at 187.94. So right around there. So here on the point and figure chart, I built this because these were the targets we were using, and obviously we do have a lower target, and that's only if 175 does not hold. But you can see it's bumping up against 188 right here. And finally, the Dow, the diamonds, we're just looking at the same setup again, overbought. Positive relative strength here, which is interesting, but that's versus the SPY. I just want to make sure that you understand that. We take our charts versus the SPY here. So very interesting setup, but a little bit stronger, and it's kind of in between two ranges right now. Currently trading just exactly at 330. So everything is on a resistance level today as far as I can see. Okay, as promised, I wanted to look at Amazon here. I mean, this has been the chart from the beginning of the year. We have some buy and sell signals here, but really the main point of looking at this chart is to show you that it's been in a downtrend, and that a split, again, while fun and psychologically, more accessible, I think it's an interesting, way to kind of manage your stock. But from a company standpoint, but this does not really mean much in the way of fundamentals or technicals or anything. And so this is just a bit of a momentum trade. I just wanted to point that out. And so I've only got a few minutes left here. So I wanted to show you what I saw on my screener. And we have two different ways to screen for stocks. And I'm looking at the ETF here screen. And I noticed the top three ETFs that came out were a lot of the ARK funds. So it was ARK Innovation, ARK Autonomous, and obviously the Next Generation. So if I just wanted to look at those really quick, I know these are popular. This is not any kind of, bashing of anybody. I'm just calling out the charts. We actually have a relative strength sell signal on this, but this has obviously been in a downtrend for quite some time, and this isn't news to anybody. But the fact that it's coming up on my screener as a continuation of a sell setup because it's overbought and still in a downtrend, I just thought it was worth pointing out. I'm going to look at ARKQ as well. The Autonomous and Technology and Robotics Fund. Again, a very similar setup, all overbought, kind of having trouble. It is looking a little bit better. I can't say that it hasn't shown some positive technical setups, but from this standpoint, it doesn't look great. And so I wanted to just show you the capability of, where these ratings are coming from and what you'd be using on the ACP platform. Obviously, if you're looking at the ACP platform here and you're able to kind of view ETFs, and look at how, all the powerful capabilities on ACP, have never been better. And I know that continue to get better, over time. But looking at just what you can do when you add the power gauge to any kind of setup, like I think I have a chart in here for Goldman Sachs. So we'll look at Goldman real quick. And then there's the plugin, right? And I got a very bearish signal on Goldman. Okay, not a signal, but a rating, right? Financials, technicals, experts, all in sort of the red area. The only thing that's showing green is earnings. And so if I go back and look at Goldman real quick, you'd see basically a stock that's been in a downward trend. But I just wanted to kind of point out just a few things, again, from the market standpoint, what's happening out there and what we're seeing. I just don't see an end to some pressure on the downside here. Okay, everybody, that's all the time we have for today. I hope you enjoyed this week's halftime show. Thanks for tuning in, and we'll see you again next week. Take care.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.